All right, we have a local genius here, Charlie Brady. He runs all things stocks. The guy's a genius, and he reminds you, if we're up this month, Neil, it would be after 3 down months. And sure enough, he's right. Now, in order to sustain that, though, we're going to have to sustain something here. And, we're in positive territory, not by much. So with wild swings, we could lose this here. But it would be a good start to the second quarter if we finish April up. And right now, that is looking the case for the time being. But there are concerns, like reports out of the Wall Street Journal today and others, that a lot of foreigners are losing interest in our debt. They're still involved. They're just not as involved. And seeing as we seem to be accumulating debt at a pretty record rate, that could be a worry. Is it to my next guest? Market watchers Catherine Rooney-Vera, Gary Kalpam, and Trevor Hanger. Trevor, is it to you right now, is it a worry?
Well, I think for the time being, it's something that you got to keep an eye on. I wouldn't say that we're in a place right now that it's going to cause a whole lot of panic, but certainly something to keep an eye on. I think the second quarter, the third quarter for the Trump administration is going to be a big one in terms of its impact on the marketplace. And certainly if the looming trade wars kick up in high gear, it's going to be something that investors aren't going to take kindly to.
Since we're accumulating that at a rapid rate, even if they were to remain frozen in place right now, Catherine, that would mean less foreign participation, technically. Would that worry you?
Neil, what worries me, and I think everyone, we have to face facts, is that the debt is unsustainable and deficits are growing. We talked about this before. We're engaging in pro-cyclical fiscal policy. Tax reform is great. We're bringing down taxes. Revenues are lower. That's fine. They can produce more revenues from stronger economic growth. But what we need to do is reform the entitlement programs. Those are the biggest drains on the fiscal accounts. And over 10 years' time, we're going to have Social Security completely bankrupt, Medicare and Medicaid, interest payments consuming 100% of our revenues. So this is something that we need to face. In the times of Paul Ryan, we were facing this, but now I think the Republican Party has not focused on what's important here.
Yeah, and these are issues that with just slight adjustments, even today, Gary, could solve a lot of problems. But we don't show that willingness, and I fault both parties for that. What do you think?
Of course, and just when you thought that Ryan and McConnell, who promised they were going to do something, decided to spend an extra $300 billion a year, I don't blame foreigners. First off, they're not getting a lot for their money, number one, and number two is we are doing nothing about it. And Neil, just to simplify it, today we added $3 billion to our debt, and every day going forward. And today, $1 billion of our tax dollars went to pay the interest on the debt, and all those numbers are going to skyrocket over the next few years, and that's not even including if interest rates do spike higher. If that happens, look out.
Trevor, the flip to that is that if we do see our growth move up to 3% or even a little bit north of that, that can solve a lot of problems. Are you in the camp that it will?
Well, I certainly think that a move north of 3% would make a big difference. I think it's important right now for people to believe that the U.S. economy is clicking along at the right pace. The commentary on this panel about where we're headed from a spending perspective is real. It's a problem, and you can't look to Washington to reform entitlements at any point in the near term, or even in the medium term. And so,
no, I think you're right.
That's just not going to happen. I think Paul Ryan's decision not to seek re-election is probably the tightest point there. And so, yeah, it's important for those signs of growth to be there, because if they start to go, it could be a problem for the Republican Party.
But so far, so good on tax money that has been coming in revenue. Republicans like to say that's their secret weapon, because despite your concerns, Catherine, it's working. You say what?
Undoubtedly, Neil, and I think the $1.4 trillion that we're talking about over the next 10 years for tax cuts, the cost will be funded by economic growth. It is strong for economic growth. It looks good. My concern is going forward over the next 10 years, the unsustainability of the deficits and the lack of government incentive to tackle the deficits at this point. I will add one thing. China is not going to be selling our debt. There is no market, Neil, as deep, as liquid as U.S. Treasuries. China has massive trillion-dollar surpluses in their trade accounts, in their reserves. There's nowhere that they can park their money rather than in U.S.
Unless
Treasuries.
we get into a trade war, Gary. Unless we get into a trade war where, spite overcomes wisdom, right?
I don't think they're going to cut their nose off to spite their face, because
Right.
if things go the wrong way, they get hurt also. But I have to mention something here. I don't think 3% does the trick because of the trajectory now, which way the debt's going. I hate saying this. I think the people of this country are doing a great job. I think Washington is fighting against us with how much debt and deficits are out there, unfortunately.
All right. Aren't you a cheerful person? All right, guys, I want to thank you very, very much.